Hey guys, welcome to today's Forex trading lecture. Today we'll be looking at the introduction to Forex trading. The overview for today's class is what is Forex trading, who trades Forex, the pros of trading Forex, then a summary at the end of the class. Okay, if this is your first time watching our video, make sure you subscribe to this YouTube channel, turn your notification post on, and like this video so you give us a promotion here on YouTube. Thank you very much. What is Forex trading? Forex, as the name implies, is an abbreviation that stands for foreign exchange. Foreign exchange. It is a global decentralized market that is not particular to any nation or any community. So in other words, no nation can regulate its policies. Good. So now I'll give you an example that most of us have engaged in forex trading foreign exchange in one way or the other. Like take for instance, for those of you that reside in Nigeria, you prayed for your uncle to get a green card lottery to America, and finally he did. God honored your prayers, and he got to America. So on his return, he decided to get you to come back to give you $100 bill. Good. And he handed over, and while in Nigeria, he gives you this $100 bill for you to be able to spend. Mind you, in Nigeria, the denominational currency is naira. You can't spend dollar here in Nigeria. So in other words, the dollar is as useless as any other paper in your hands here in Nigeria. That doesn't mean some people won't collect the dollar from you, because I'll collect the dollar from you. But the point is that you can't spend it in the markets here in Nigeria. So what you have to do, you have to go to a local forex exchange desk to be able to convert the dollar in your hands to the denomination currency in Nigeria called naira. Okay, let me use another nation. Take for instance, we are residing in China, and the China uses the yuan. Good. So, and your uncle comes back from the US and meets you in China and hands you over the US dollar. And in China, you can't spend dollar. You're going to say, though some markets may collect dollar from you, as I've said earlier, may collect dollar from you, but the dominant currency there is the yuan. So what you need to do is convert your dollar to the yuan from your local forex exchange desk there in your country. So you see, most of us in our own ignorance, we've performed forex exchange in one way or the other. So please pay notes. The question again, based on our lecture today, is why is forex so unique? Forex is so unique because it's the most liquid market ever. It is the largest market ever, largest electronic market ever. So you must have that in the back of your mind, that is the largest electronic market ever. And aside from that, forex has other uniqueness that we're going to see later on in the class today. Moving on, who trades forex? You must pay attention who trades forex, because this is very important. Very, very important. Number one, the commercial banks, the central banks, corporations, institutional investors, individual or retail traders. So we're going to dwell in this section. I'm going to be explaining these various people briefly. Commercial banks, they are the largest volume traders in the market. In other words, they move the market the most in the section called the interbank market trading. So they move the market the most. They control the market move. They are known as the market makers in the market. Examples of these banks is the Citibank, the JP Morgan Bank, the UBS Bank, the Barclays Bank, the Deutsche Bank, etc., etc. These are the big banks that are the major players in the financial forex market. So you must pay attention. Not the forex, the commercial banks you have in your local, this is like in Nigeria. No, these are not the banks, though they perform forex trade, but not those banks. Another one we'll look at today are the central banks. They have a huge impact in the forex market. Why? Because they regulate their own domestic currencies to maintain an healthy economic environment and remain competitive in the market. I'll explain. Like for the Bank of Japan, the Bank of Japan has so done their currency to be very low in the global market. Why? Because over the centuries, Japan has developed more in technologies, and to be able to attract investors to come to their nation, to be able to patronize them, what do they have to do? They have to make their currency as low as possible. In other words, to their exchange rate as low as possible, their currency as low as possible, in order to attract these outside investors to be able to come to their nation to be able to trade and buy their goods and services. So have you seen it? So this is how central banks, these are banks unique to their own nations. So this is how they perform or take part in the Forex financial market. Good. So let's move on. We have the corporations. Most multinational corporations deal a lot in importation and exportation, as we all know. For example, like the Toyota, you want to say the Toyota, the PZ Kuson, the Unilever, and etc. etc. There are a lot like that. But the question is, why do they partake in the Forex market? They do this to hedge the risks associated with foreign currency conversion. There are risks associated. Mind you, any transaction performed in foreign exchange market can either lead to a profit or a loss. So why do they hedge the risks? Why do they want to hedge the risks? They are hedging the risks in other words to reduce their potential losses or their potential, the ability or the potency for them to lose in the forex market. So they enter into forex trading to be able to hedge their risks, so have an advantage in the forex market, so have an advantage when it comes to them trying to perform this transaction to get a particular goods or services. I'll explain further. Take for instance, a German company wants to get a spare part from Nigeria. That's if we don't get a spare part from Nigeria or from the US. Let me use the US. I want to get a spare part from the US, and to get this from the US, mind you, the Germans, they use euro, and right there the US, they use US dollar. Great. So for them to be able to get this from the US, they have to convert their euros to what? To dollar. Have you seen that? They have to convert their euros to what? To dollar. And in so doing, they are performing this. And this can either lead to a loss for them or profit for them. So for them to have an edge in the market, they have to engage in forex trading with the sole aim of making profits. I'm going to say they have to engage in it to what? Make profit, to profit them, because there is a potential that the exchange rates may not be in their favor. You want to say many government policies may not be in their favor. You want to say, so this is why these corporations engage in the forex market. So let's move on. The next on the list is the institutional investors. Institutional investors are also known as hedge funds. They are the second biggest player in the forex market, next to the banks and the central banks. Examples of these are the banks, the credit unions, the insurance companies, and the hedge funds, etc., etc. Why are they that big? They are that big because they handle what we know as the pension funds, the endowment plans, and foundation funds. So in other words, all this pension you hear, they are the ones handling it. Those endowment policies you buy from various insurance companies, they are the one handling it. Foundations that have funds, they are the one handling too also. Why? Because most foundations want to increase their profits or increase the funds that they have to be able to meet the needs of the people they cater for. So they have to remove a portion of their funds to give to all these institutional investors to be able to trade and make profits for them in return. So this is how institutional investors partake in the forex financial market. Let's move on. We have the last but not the least, the individual or retail traders. In this category, that's where we fall into. We are the humble guys. This is where we fall into. But the issue here is that we move the market the least. Our trading volume is nothing compared to that of the banks, the central banks, the corporation, and institutional investors. We move the market the least. Mind you, but there are still some other retail traders that built their capital over time. That's over the years, over 10 years, 12 years, and they can move the market also. But generally, we retail traders, we move the market the least. We don't have the capacity yet to move the market the way we want to. So all we need to do, we need to have an edge in the market, which we're going to be seeing on later in our videos here on this channel. So pay us attention, and that's why also what you have noticed, retail traders also need to have what is called risk management, and I'm going to be talking about that later on in this channel. Okay, let's move on. Here's the forex market hierarchy. Like you can see, we have the major banks up there, the electronic brokerage services, the router, we have the medium size and the small bank. These are the various commercial banks you have scattered around your own nation. So the others are the retail market makers, like I explained, I called on earlier, the retail NCN, the hedge funds and commercial companies, and the last but not the least there you can see on the chart on the green box is the retail traders. So which is the category we fall into. So that's why we retail traders, we need to have an edge in the market. We need to be able to have play the forex market like a casino. We need to have that mindset of always the win mentality. Don't worry, we see subsequently things like this on this channel that will help you become more profitable. So let's move on. Pros of forex trading. The pros of forex trading. Number one is high liquidity. Number two, better risk management. And number three, trade anytime you want. So why is the forex market very sweet? Why is it interesting? Why is it unique? Why is it better than other markets? That doesn't mean it's far better than the stock market or futures market, as the case may be. But why is the forex market unique, and why does it stand out is what I will be explaining now. Number one, high liquidity. As I said earlier, the forex market is very liquid and the most liquid market ever. Why? Because it has the ton of 6.6 trillion US dollar moving in the market every single day. It has a ton of 6.6 trillion, over 6.6 trillion. Note that, moving around the forex trading market every day. So in other words, there's a lot of money for you to make here on the forex market. So you see, that's why it's unique. It has like high liquidity. Moving on, better risk management. Here in forex trading, in the forex market, you can manage your risks, unlike other future markets and stock markets. In the forex trading markets, you can manage your risks. You can manage your risks. And the last but not the least is you can trade anytime you want, because the forex market is open 2-4 from Monday to Friday. Only closes on Saturdays and Sunday. So the forex market is open from Monday to Friday. So you can wake up by 12 a.m. You can wake up by 3 a.m. You can wake up by 6 a.m. Anytime you want to trade the market, as far as you have an opportunity to trade on, or you have a currency in mind, or you get maybe your fundamental analysis personnel, so you want to trade and you heard the news and you want to trade that news, you can wake up anytime as far as you already have an opportunity or you are seeing an opportunity in the forex market. So it's just as simple as that, and these are the benefits of forex trading. So the summary for today's class, will finally come to the end of this lecture is: number one, what's forex trading? It's a trading or an exchange that will cost between two or more currency pairs with the sole aim of making profits. Have that at the back of your mind. Who trades forex? The banks, the central banks, institutional investors, and retail traders. What are the pros of forex trading? What are the benefits of forex trading? Market liquidity, flexibility in trading time, and etc. So thank you for watching today's video. See you in the next video.